Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and today was a exhausting day in the market. I can't think of any better way to define today than exhausting. So before we get into it, you guys make sure you like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. So today we ended up red, deep red, blood red. I mean, everything we gained, even in our green, slightly flat couple days, the markets took back today. And I'm gonna give you guys my theory on that, right? You guys know this is retail earnings week, right? We talked about that earlier this week. Yesterday, Walmart had their earnings, bad. Today, Target had earnings, bad. So what do we see? What do we expect from everything else? These are the two big dogs in the retail consumer goods industry. If they're doing bad as far as earnings, so Walmart came down about 10% yesterday, I believe, and Tesla came down about 20% today. So let's check it out. Actually, we're gonna get straight to it instead of talking about it, right? So on the 5-day, let's see, Walmart. Y'all see it here? 10% drop. 17% for the day. Just from yesterday, earnings, Walmart is down 17%. Now let's take a look at Target. Again, these are two companies that were supposed to be our saving grace. Look at Target down 24.93% for today. They just had their earnings this morning and they are down 25% from yesterday. Actually, 25, no, I'm sorry, that's wrong. 24.88% from yesterday. So taking a beating, guys. When we see these two big dogs in the consumer goods industry take hits where we thought that things were safe, right? Because in a recession, people usually go to consumer goods because you have to go shopping, right? Of course, the price of those goods is going to go up because of inflation. So it seems like things look good for consumer goods, right? But in this case, we're still suffering from the supply issue going around the world, right? We know COVID-19 hit us, and the supply shortage is really just impacting everybody. So the consumer industry, like Walmart and Target, so now they have to deal with inflation where prices are already going up, and they also can't meet the supply. So demand makes prices go up even higher, and there's no way for them to accumulate this money, right? We already ran prices up one. We can grab more debt, but why? And we can't even get the things that we need in order to run the prices up on them. So that's killing the economy right now, especially for the consumer goods, the retail industry. So I think that is what drove us to see this 4% down day. We're seeing 4% down in pretty much every index. So let's talk about that, right? We see the Dow Jones down 3.57%. S&P 500 down 4.04%, the NASDAQ down 4.73%, and the Russell down 3.56%. So seeing that, again, everything is taking a beating, right? People, this is that FUD again, right? This is that FUD, that fear, uncertainty, and doubt. Because we run to this sector because, hey, we think it's safe here. Then we find out, oh no, now it's not safe. Where do we go? Where do we put our money? Do we hold cash? And I think today that is the dilemma that hit the market. If we look at our stock heat map and look at it, every sector is blood red, including energy. Energy actually came down from that 114 that we saw the other day to, I believe, 109. Let's check that out, right? Let's check out oil. Oil, it's 109 now, and it was at 114 when we looked at it on Monday. So even energy is coming down. People are taking their money out of everything, right? You look at everything, it's bright red, nothing but blood on the map. So, I mean, today was what we call a bad day. However, there was still money to be made in puts, right? The market started out up, and it was very confusing, but if you bought you a put and you held on, you probably made over 100% on almost any one of these big companies today. I myself, I made a little money. I got out, do the work, and I left it alone. However, if I would have had the opportunity to stay fully in it, I would have made a killing today. I would have made a lot more today than we've lost over the past several months or whatever the case is. I would have made a killing today, but I didn't, right? And that's fine because it's always another day, always another play. So that's what I got. I mean, another thing I want to pay attention to, right? You guys know we got to check out our fear and greed index. The last time we checked, right, this thing was at a 12. I believe on yesterday, it might have actually come up to about a 13 or 14 because people were excited. Even after Walmart took a beating, we saw a green day. People had very good anticipation. Jerome Powell spoke. The market still maintained that green. He pretty much set in stone that, hey, we're going to see at least 2 more 50 basis points interest rate hikes, which we had already discussed that as well. So the market was pretty confident. It felt good about it. Hey, we priced all this in. Everything is going as expected, and then boom, no one is safe, and the market goes into terror mode all over again. So right now, that's what we're having to face. I think the only thing we can truly do about this is continue to just you stick to your strategy, right? You guys know what my strategy was for this year, right? We had our sheet, VTI being one of our primary ones. We're gonna call dollar cost average into 80% of that, but we dollar cost averaging into it over the year, through the year, and we buying financials and we buying a few of the big dogs, and we had our prices. We can even let's take a look at those prices again. We're gonna take a look at it. VTI, 80%. It doesn't matter what the price of it is. We buy it at market price because we dollar cost average through. Goldman Sachs, one of our financials, which is definitely taking a beating. It is actually down to $310 right now, I believe. It's currently sitting at $310. Morgan Stanley was an alternative. Wells Fargo was our second one, with Bank of America being an alternative. Apple being one of our big dogs. Tesla as an alternative. Again, it's taking a beating right now. Microsoft. We have SoFi, which of course it's down to $6 right now, so it's definitely a steal, but we already got out of that on our money, especially around the Super Bowl. And we have cash, 10% cash to trade options and keep in our account. I actually have probably more than 10% in cash now. I want to say my account is probably about 50-50 right now because I've been having to trade options so much in order to keep up with this market. However, I am sticking with the plan. I have not strayed away from majority of my portfolio sitting in VTI. And I think Wells Fargo, MO. I have some Apple. I have not bought into Tesla because I'm waiting on it to hit that $500 range again, which I do believe it could get very close to. If it gets under $600, I'm probably gonna buy. I'm probably gonna hit the buy button. And I'm looking at about under 650 because it usually seems to hold strong there. If it does that, I'm definitely gonna load up. But that's what we're doing. Make sure you stick to the plan. Keep with the strategy this year. This market is not giving up. It's not giving us anything. We get one good day, it turns around and gives us 2 bad ones. And not to mention we had 3 good days. It hit us with 3 consecutive weeks of red. So this market is definitely going to be a battle. However, we're going to stick with our strategy. We continue to dollar cost average through, and everything is going to be fine. There are more earnings throughout this week that could potentially bring the market down, but I think Walmart and Target were 2 of the major ones, the big dogs that people were really looking forward to. I believe even Home Depot did their earnings this week, which probably, who knows how it went. And one thing I noticed, I did think about earlier is, as the price of homes come down through this market, Home Depot may suffer. Companies like Lowe's, who had earnings today with Target, may suffer. So this market is definitely not going to give us any breaks. And Jerome Powell actually said that's what he expects. So we just basically got to stand there because this is where millionaires are made, right? At least that's what I'm being told. I'm not a millionaire yet, but that's what I'm hearing. You continue to buy through this market, and when things boom, you shall prosper, right? You shall be rewarded. And I mean, it's often said, no risk, no reward. Right now, we're putting in a little risk for a large reward. Hopefully you guys are making some money over the term. But I thank you guys for joining the journey to become wealthy. Hopefully you enjoyed this video, and I'll see you later.